is this is trading entertainment. And so everything that I just said that you could not hear, act like I didn't even say it. Act like I didn't even say it. I am Grady on the charts and welcome, 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 welcome. Today is Tuesday, May 27th. All right. Um, let's see. Are we gonna hop into the tongue twisters and get ourselves loose, or are we loose? Are we loose? The next nest will not necessarily be next to nothing. Like, yeah, 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 the next nest will not necessarily be next to nothing. The next nest will not necessarily be next to nothing. All right, let's go ahead and hop into some news. What do we have today? We have durable goods. Orders for April, month over month, coming out at 0830. It did come out. The forecast was 6.8%, and it seems that we were dialed in at negative 6.3%. So the forecast was negative 6.8%, and we came in at negative 6.3%. What is the durable goods? What are durable? What is this report about? New orders for manufactured goods in the U.S. plunged by 6.3% from the previous month over month, 296.3 billion in April of 2025, the sharpest drop since January of 2024, but slightly softer than market expectations of 7.8% decline. The result trimmed the revised 7.6% surge from the previous month, pressured by the start of the blanket 10% reciprocal tariffs in the period and a softer demand for goods following the front loading of orders in the previous period. Orders sank for transportation equipment, down, let's say, negative 17.1% to 98.8 billion, mainly on non-defense aircraft and parts, down 51.5% to 18.1 billion. As tariff concerns drove airlines to halt demand for Boeing aircraft, which also received 8 orders in the meantime. Orders for capital goods fell sharply, down 14.6% to 101.4 billion. And that source is the Census Bureau. And if you want more information on that, you can always go to tradingeconomics.com, click the calendar, or go through all of the indicators that it has there for financial news. This is not um what do you call that when people sponsor you? This is not sponsored. This is a informational website I like to go to get my market news. Time is 9:28, 09:28, 2047 EST. So we're gonna go ahead and hop over to the charts and see what we're looking at this morning. Let's see, what are we looking at this morning? This morning we have a lot of different things going on. So I've updated my trading strategy multiple times here, and the updates to that strategy have brought us um, a lot of confidence and a lot of oh, so it can go up and down. A lot of confidence and a lot of uncertainty as it comes to getting into the market, right? Because the market has been doing a lot of wild things, and so because the market has been so volatile, it's caused us to really begin to hone in on back testing and hone in on our strategy and not focus so much on the volatility of the market. Because if the market is going to do that, then it's just more important for us to focus on our strategy and dial in the way we use the strategy, right? All right. So overconfidence is going to be the issue here. Overconfidence would definitely be the issue. It'll definitely be the thing that would stand between us and the success that we are pursuing. So the problem would be is being successful in the market, then turning right back around and repeating that activity, just repeating that activity, being disciplined, repeating that activity. And in order to do that, we need to focus on our strategy. The market is open. Just prior to the market open, we dropped right down. We took out this low. Now we've just popped up into this imbalance. Overall, overall, it is important for us just to step back and look at the hourly chart here. Just a moment. Look at this hourly chart just a moment, right here. And one thought just flashed across my mind, right? Flashed across my mind. Immediate trade right off of 930, right? Meaning that I would try to trade this pre-market imbalance to the downside. First thought that flashed across my mind. Now, is that a part of the strategy that we have documented here? That is not a part of the strategy that we have documented here. First thing to be aware of, to be careful of. Okay. So what am I looking for and looking at? Well, what I'm looking at right now is I am looking at the consequent encroachment of the London session. I'm looking at the consequent encroachment of the London session, and that level comes in at 21,284, just around that area, the 28,280 level. And we traded right up into that level here, bang, touched it, and then we dropped right down. What are my concerns right now? My concerns is that we may have the necessity, if we're bearish, if we are bearish, then we may have the necessity to run out the London session high prior to the move down. If we are bullish, then this retracement back into the Asian session high here, as we just crossed over the Asian session high, then that would be the element that I would be looking for, right? That would be the element that I would be looking for. So London session high would come, Asian session high would come in here. I would go control X, and then I would come here and I'd go control V, because I'd like to see that. And I'd like to see that level on the lower time frame. I'm gonna just swap the style color. So we drop in immediately off the open and just drop right down and touch the Asian session high. I don't really anticipate like a V shape or immediate reversal off this level. I believe that when we come in contact with the session highs, that there's often multiple touches. Maybe even trade through, pop up above, trade off of, or drop down below, trade up to. Okay, so there's 26 minutes left in this hour, and then we drop right into Asia session high. There's an imbalance here, and there's one here. Overall, that could look extremely bullish, but we can't ignore the fact that last night, the London session took out this high and took out this high inside of this imbalance created once we ran up to the liquidity out of this area. We broke down, we broke market structure, we closed below these levels. Once we closed below those levels, we just ran up last night. We took off these highs and we closed up above this area. So am I, as we call it again, front running? Right? Am I front running this again? Right? Is it possible that I'd be getting involved and stepping in way too soon ahead of price action? Well, price is fairly slippery right now, right? And because price is so slippery, I'm not really right now, right? Because price is so slippery. We're down below the Asian session high. Ah, on the 15-second chart, we just put one wick right up and we touched that Asian session high. Now, you're probably saying to yourself, well, Grady, look at the pre-market. Look how we're plummeting down through all of these levels. True, 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 true. We are approaching consequent encroachment of the Asian session. But I haven't made a move, and I have not made a move because what I'm waiting for is the close of this 1 hour candle, right? I'm waiting for the close of this 1 hour candle, which is going to close, excuse me, at 10 a.m. And I think and I would like to be and you know I'm looking for the words to describe my appreciation for all of the instruction that I've been given, right? I'm looking for the words to show my appreciation for the instruction, because it really comes into play when you are cracking through so many different elements of trading, right? So of this entire weekend, I was having this conversation with my son, and we were talking about the Dunning-Kruger, right? The Dunning-Kruger effect. We are at the midnight open for today's candle. Midnight open is here. All right, so there's the midnight opening price. Everything below this price, I'm assuming is going to be the tail of today's price action. Nope, I doubt that. Did it because let's see, opening price yesterday is it, and it seems that we could be running. I'll say what was yesterday? Yesterday was Monday, right? So the closing price on Friday and the opening price today. What is 50% of that range, everybody? Class, what's 50% of that total range? From the close on Friday to the opening today. And why would that be important? Well, it could serve as an important factor. That number is 21,129.50. That would be just below taking out the low here at just below this low, right where I have this accumulation, manipulation, distributions reminder for myself. So the 50% retracement from the close on Friday to today's open. And the retracement of that level to me would be significant because yesterday we had a short day. So in order to accommodate or to compensate, better word, in order to compensate for the reduced price action between the 2 days, then we would be pulling back into that range. I'm going to assume. So I'm looking at the wick on the hourly time frame. We dropped into an imbalance, and the low of that wick is 21,193 here. It's the consequent encroachment of the agent session last night. That's last night's consequent encroachment of agent session. Um, and then we have a solid rejection at this time frame. How much time do we have left in the hour? 20 minutes? Ooh, I mean, we tapped it and we bounced on that 15-minute candle. It's 5 minutes and 43 seconds left in this candle. Hour looks cute, but this is very interesting to me. Macro begins in 10 minutes. I am excited. Yes, 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 Virginia. I am excited. And the reason I'm excited is um because the back testing and the studying studying as the unexpected fruit of this sort of clarity. I'm not saying profitability yet. I'm not saying accuracy yet. I'm not saying consistency yet, but clarity that, I'm saying, oh, this is where we are in respect to, um, in respect to price and time, or time and price. And I say it's back testing, but one of the other things that really has helped me is separating out my levels from my um sessions, right? So my levels from my sessions. So I can have the levels as far as the levels of the candles or the PD arrays on one chart, and then where we are in the sessions on another chart. So if we're at session high, or we're at the consequent encroachment, or we're at the session low, it's completely it's completely separated from, well, where are we in the body of this particular higher time frame, PD array or candle? Or did we take out just highs in general visually, right? So it's not abandoning. So the prices, we just bounce and we pop right back up. We are at nearing Asian session high, the Asian session high. So it seems that we've had a rejection down near the consequent encroachment of the Asian session. And I am waiting on time. I am watching the clock. I am watching time. On this 5 minute candle, I'm just noticing how the body closed here. And then the body of this down closed candle is here. And that is in the premium of last night's Asian session. We had to take some time. We had to take some time with a 5 minute gap. We had to take some time and come back. We had to take some time and step away. We had to. I'm going to use this as a volume imbalance. And I am watching because um roughly we are roughly and roughly is actually not the term when you actually measure a thing, right? Because you're specific accurately. After you measure something, after you grade the range, you are accurate actually, uh, roughly, but you're actually we're in the premium. We're like roughly above 75% between the high of the Asian session and the um consequent encroachment. We have 2 minutes and 21 seconds left in this 15-minute candle. And I believe this is going to be at the close of this 15-minute candle, we're going to begin the last 15-minute candle of the hour with the next one. And remember, the low of this candle here, this is actually the consequent encroachment of last night's Asian session, and this is literally the high of the Asian session. We pop right back up to it. We touch this up close candle, and then we rolled over. Because we show sensitivity at consequent encroachment, I am still waiting on time. Still waiting on time. Because it's almost as if I'm entering the market with no bias, right? No bias either way. And I'm going to watch to see where we are at the time of 10 a.m. when those 2 hours, when we swap from the 9 o'clock hour to the 10 o'clock hour. I need water. The weather here in Texas was cool and humid, right? Mm. We had a rainstorm blow in last night, and so I got out this morning for my morning ride on my bike, and yeah, it was nice. However, I'm feeling a little dehydrated. I need to watch my sugar intake. Mm. 47 seconds left in this 15-minute candle. Excuse me. 47 seconds left here at the 15-minute candle. And 30 seconds, and we just pressed right above the Asia session high. Now that's 5 minutes before the beginning of the macro. And before the macro begins, um, I'm going back to my notes, right? Before the macro begins, I'm just peeking in my notes because what I wanted to make sure is that whatever liquidity that we target prior to 10 a.m., I wanted to make sure that at whatever range we were in, that I would attempt to target an external range or an extremity range liquidity source for the trade to the opposing liquidity. For example, for example, take a 30-minute chart. Even in this short range between this low and this high, at the exchange of the hour, right, I would rather attempt to go short from the extremity or the run of this high. And I believe if we ran this high, that's probably more of a bullish sign than it would be bearish. But look, I'm watching the market structure. If we get into this area and we see a market structure shift to the downside, then that's where I would target, right? Market structure shift to the downside. 9:46 a.m., the last 15-minute candle of this hour. I'm curious as to how this hour would close. This hour could very well close bullish. We could attack the opening price of this hour and go bullish. The next candle would open. If it drops down toward the Asian session high, it would be in the wick of this candle and in the wick of this candle inside of this imbalance, right? So we would have to traverse this range, move back into the premium, and close with only wicks and a discount on the hourly chart. Watching that too. Watching that too, and we'll see what that means, right? So it's touch and go, right? It's touch and go. It's touch and go. I don't want to fall victim to, as I was saying, overconfidence, thinking or anticipating that every signal that I see would be an entry signal, right? So every signal isn't an entry signal. You see how we inverted this volume imbalance? And I drew that volume imbalance here on the 5. Well, we didn't invert it. Well, here's the volume imbalance, the gap. We dropped right down into it prior to 10 a.m. I don't like that. I do not like that. I do not like that. Sam, I am. Do not like green eggs and ham. I don't know if that's how it goes. I can't remember Dr. Seuss exactly. I believe that this gap could possibly serve as our first presented gap. If that were the case, would this gap be this? Would it just be a fair value gap? Did I miss it? Did I miss my entry? Excuse me. 2 minutes to the beginning of the macro. We're coming into an interesting level in the premium of the London session. We're at consequent encroachment of the London session again. This is where we had the first move down. We dropped down and pop right back up into it. Up inside of it. Time of day 9:48:55. Mm-mm-mm. Shooby dooby doop doo wop wop. Shooby doo wop wop. Computer love. All right, so we closed here. Wick into the wick of this up close candle inside this imbalance. Time of day 49. 49. Mm. Macro begins in 40 seconds. How many seconds left? How many minutes left to the close of this 15-minute candle? There's 5. Here's 15. 10 minutes and 24 seconds to the close of this 15-minute candle. We're in the low of the prior up close 15-minute candle as we reject from the consequent encroachment of the Asian session. Hmm. Okay. Doubt develops over time. Doubt develops over time. And it's just this weird thing that if you become sus- 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 if you become susceptible, vulnerable to it, then it becomes a normal part of your thought process. And we might think of it as the opposite of overconfidence, but it's not the opposite of overconfidence because the opposite of overconfidence is I don't know. Is the opposite of overconfidence confidence? I wouldn't think so, because it sounds like a range, right? Where you completely lack confidence, right? And then you are overconfident, right? And then you are confident. So yeah, yeah. Or as I like to call it, unconfident. Ba, 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 ba. Ooh, I had a question. I had a question. And I was looking for a word. Ah, yes. What is the, so, okay, so we know what coordinate is, right? A coordinate, right? Right. Coordinate. We know what a subordinate is, right? Subordinate. What is the opposite of subordinate? Like, what is the word that would have ordinate in it that would be the opposite of subordinate? And I know you're thinking to yourself, well, Grady, Google it. No, I know I could probably Google it. It just wouldn't be just, it wouldn't be as fun as asking, literally the search engine, the YouTube search engine algorithm, right? It wouldn't be as fun. Okay, so now we are at 9:52 a.m. and we are in the macro. So the question is, Grady, are you looking at a bearish fair value gap in this range between the low of this candle and the high of this candle? Is that a bearish fair value gap? Hmm? Would this be the area that we would use to go lower as prices rejected this area? Or is this a speed bump that we've encountered on our move up? Everybody wants to know. Everybody wants to know. On the lower time frame, what do we have offered? What is being offered to us? I need to take a look and see that the high of these candles are just below the consequent encroachment of the London session. We've tapped that consequent encroachment level once, nearly twice, but then we did not have like a violent move away from it as much as we kind of just consolidated in this range, being that the consequent encroachment of the London session is 21,882. It could be a pass through, right? So we could pass through this level after engaging it. So I'm watching to see whether or not that's going to be the reality of our situation or no. Or no. I would love to have seen some type of a drop back down into this area. However, this doesn't ring bullish to me either way. The only other way that it could ring bullish to me is if these candles, 1, 2, and 3, represent a bearish order block. Then we break above the bearish order block, drop back into the high of it, and then peel from there. Um, but it could be a misread of all of that. And I call it misread is because I'll only have this much information on my screen all at one time. Please delete that. Thank you. Mm-mm. Last week's opening price is 21,300. We ran above that and then dropped back below it. Doo-doo-doo, wibbidi-doo-boom. Ba, 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 ba. There's the consequent encroachment of the Asian session at 9:55 a.m. That looks like a interesting scenario. We used to be able to click this button and then they would have this thing that says create order. And that's one thing that's really starting to kind of get to me about Rating View. It's that they make adjustments to their software, and I do not know that if there is any um overwhelming sentiment that these changes need to be made, or is if it's just that they keep us on our toes by um what's it they keep us on our toes by making these graphical changes that we have to just deal with on the fly. I'm pricing in the oh, it happened to me the other day. I was doing something and I promise you my finger just double clicked for like no reason. And I put this TP here, and I am not confident in this TP. I don't feel like that I'm gonna sit here and watch us run to that level. It just seems to me a little bit off-putting. Yeah, I know. I should be off-putting. Do-do-do, shoo-ba-doo-doo-boom. Doom, boom, 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 boom. 3 minutes before 10 a.m. And all I really wanted to do is be able to either right click and have something that says create order instead of having to do this because it condenses the real estate so dramatically, right? Visual real estate is condensed so dramatically. Maybe I could close that down and then do this. Or maybe I hit some sort of a hotkey and removed it myself. We moved above consequent approachment of the landing session. Dropped right back in and touched it one time, and then we moved up. We're approaching 10 a.m. So as we approach 10 a.m., thoughts, thoughts. So at this point, I will have the green light to trade. All right, I'll be good to go. I'll be, according to my rules, 10 a.m. is a good time to wait. Open and range volatility has come to a close. Right, we're all good. Call it LS. London sesh. Mhm. 24 seconds left in the 24 seconds left in the 15-minute candle. You do bop boop bop boop bop boop bop boop bop boom bam boom ba doom boom. You bam bim bam ba doo 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 doo. Bloop, bloop, bloop. 10 a.m. We flash. Is that the news release? Nope, because we already had the news release this morning. Yoopy doop doop doo doop doo 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 zoop doop boop boom Is that the high? Pre-market high is taken? Nope, it's not. It's not the pre-market high. It's not the pre-market high. If there's something here in the London session above these highs, relatively equal, is there something up here? I can't see it on the one. It would have to be something like back here, or we could just be rallying to exactly where I thought we were going to be. However, at 10 a.m., we were here. Then we just exploded to the upside. Mm, something is just in my inner ear right now. Hmm. What do you want to use? How would I describe this? I would describe it as one of those hourly imbalances that's been stretching through this entire consolidation. We traded to the high of it in the pre-market, to the low, consequent encroachment near the high. Then we broke down. Here, we're back at consequent encroachment at 10 a.m. We're just shy of the London session high, within about 25%. I mean, well, yeah, it's hard to describe. It's hard to describe. I could describe it, but I don't want to. Okay. Yeah, we're roughly in between we're in the last 25% of the London session range. So in the pre-market, we dropped it from the London session high back down to the Asian session high. Put a wick inside of Asian session. The low of that wick dropped down to consequent approachment of the Asian session, and then we bounced right back up. Now we've made our way back through the London session. We're up above its consequent encroachment. We're in premium high of the London session, and we're apparently fairly bullish at this point. So when I got ready to make this entry, and these are the things that you have to just be aware of if you are the type of person who is sensitive to this type of change in your daily activity, right? Some of us we just have to have our everything exactly the way we like it, or it throws us off. When I came to make my entry, right? When I came to make my entry and I clicked this plus button, ink, things had changed. No longer did it say create order here. It was just buy limit, and that was it. No, there was no, nothing. So if I came in and I clicked buy limit, okay, the difference between this and any other and the others is I can't um I can't just automatically apply my stop losses to from here. And I think I've seen ICT do this some kind of way where he can just pull the stop loss directly from here, and it can go either, and he could just pull his stop loss, pull his take profit. Now I can do it. Oh, I know what it is. I think I know what it is. I think my issue is this. Grady, are you targeting the entries? I'm not. I'm not really targeting entry at this point. What I said I was going to do is at 10 a.m., if we were making this move up, I was looking to see if there's going to be a market structure shift as we began to run into or out of liquidity. And so I'm still watching that. We popped up to this level. and just sort of hesitated, right? Could be a Judas swing, could be we could be breaking to the upside, moving, having a very strong move to the upside, and that's fine. However, there if we broke to the upside here, where is our retrade back into the low of this level to trade from this little breaker to move to the upside, right? Where is that at yet? And it hasn't quite happened yet, so we're just watching price. So what was I saying? I was saying something about the trading window. And what I was saying was going here, going to settings, status, symbol, trading, buy, instant order placement. Maybe that's what it is. Maybe I should turn this part off. Positions, money, profits, orders, extend the line, order execution. Instant order placement, turn that off. Okay. Now, if I hit buy limit, now it gives me, hey, yeah, 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 yeah. Okay. Okay, okay, that's what I want. That's what I want. That's what I want. Okay, so trading view tutorial for you. That's trading view tutorial for you. I don't like this range. Actually, I don't like this overall range. I don't like how expanded this 1 minute candle is. Right? It doesn't really do it for me. Then we returned to the area that we were in the pre-market. This is basically where London session ended. And we're going to sit. And we're going to sit. Um, Seeing my way into a trade or being able to um flow directly into the trade, man, that's what I really want that. That's what I really, really want. I really want to be able to flow directly into a trade where I can see it setting up. But I see so many different signals as I'm coming into the market that I ignored for a long time, which turned out to be key indications of price and where it's going. I.e., this sort of a retracement off the consequent encroachment of the London session, a movement back into the high of it, right? The only thing that still rings in my mind is the consolidation that we just endured, right? And so because we just went through this long extended consolidation, I'm still a bit gun shy as far as entry and range, right? Are we going to have an extended range? Are we going to have a more truncated, shorter range? We'll see. Now we're approaching the London session high. We're going to see if we take the London session high. Hmm. Hmm. I did not take this trade. I didn't. I'm not gonna do it. Thought about it. I thought about it. I thought about it. And I thought about it. I said to myself, look, don't do the Dr. Seuss rhyme thing. Don't do that. Okay. Let's I did not take this trade after the consequent encroachment of the Asian session. And now I have a feeling about it. Now I have a feeling about it. Did the first 30 minutes of trading transpire? No, that was only 7 minutes after the opening price. 30 minutes after that was 10 a.m. And that was here. A continuation from this movement back to the upside as we crossed over that range and level. Now, as we're approaching London session high, at London session high, are we going to tap the high, pull back, trade through the high, right? Are we going to do that, or are we looking for reversal patterns at London session high? Meaning we penetrate, we transverse, we gap down, we trade back into the gap, and then we displace lower. You know, that's what I'm watching for and looking for. Price seems lethargic, although we have a lot of movement in one direction, but it isn't just getting anywhere rapidly. We had only had one real sort of a burst to any in price action here. The price is kind of gradually, kind of gradually, and then sort of movement, quote unquote, movement in price. Let's see what ES is doing. What are you doing, my friend ES? Show us what you got going on. ES is lagging the Nasdaq. Excuse me. I think it is. Yep, ES is lagging the Nasdaq. The Nasdaq has taken out this first range high, and the ES hasn't. ES is here. Comparing 1 minute charts. ES, Nasdaq, taking this high aggressively. We just traded up into the lows of this particular high. Small imbalance here. We seem to be we're not stopping, but just visiting for a second, right? Not stopping here, just visiting. We're in the premium. It seems like we may take this high out here in the ES. Once we run this high in the ES, is that going to be it though? Though. Is that going to be it though? Uh, uh, Not taking a trade. Not taking a trade is the thing that I'm thinking at this point. That I missed my opportunity. It was one brief moment here at the consequent encroachment of the London session. We traded just above it, dropped down to it. I was looking there. I had opportunity. I was confused about how technology works, and then it moved past. And so there's that. Well, Grady, why don't you just get involved now? Uh, I'm watching right now, and the reason that I feel like right now is a great opportunity to watch price action is because we've just crossed the London session high. We've just crossed London session high. So here, the lower that candle crosses back across London session. We're approaching the that sort of target area on ES. There are no pullbacks. There's no in it. There's nothing bearish in at all in any of these candles that may suggest an area where we could get involved in the long, and that's fine. This is my first day back from the weekend, and getting involved in this price action too quickly. Nah, that's definitely a no. That's definitely a no. Okay, we crossed right back up across the East London session high. Cross right back across the London session high. Uh-oh. He's getting excited. You saw me get excited? But I told you we weren't going to do that, so we're not going to do that. We're not going to get excited. It's just that we traded across, not across the London session high, then fell back in the range quickly. Hmm. Mm-hmm. Mm-hmm. Okay. Either it is or it isn't. That is the deal. Where's London Session High? London Session High is here. London Session High is here. My stop loss is above Session High. Do, did I wait for a market structure shift? That's not exactly what I targeted. I targeted us dropping back below this level, and normally I think price will would reach back across London Session High. Did I give us any enough breathing room to survive it? I don't think so. It is a continuation to the upside that will probably continue for the rest of the day. Probably so. If we trade on the to the north side of London, would I invert this trade and join in to the on the to the move to the upside? It's a possibility, but I am just waiting and watching to see what we get here because it's very strong crossing London session high. That's very strong. That is very strong crossing London session high. 2 minutes and 27 seconds. Probably should have waited to the close of the 5 minute candle before I did this, and I did not. I did not wait for the close of the 5 minute candle. There's the 2 minutes and 12 seconds. That's a problem, right? That is a I did not resolve before I entered. So what did I do? I got excited there, and I did not wait for that close from the 5 minute candle. 1 minute and 35 seconds. And I'm gonna write myself a question for my journal. And the question I'm gonna write for my journal is: Was it more likely is it more likely to see a continuation in this particular phase of the pattern, or is it more likely to see a reversal at this phase? Come to the close of the 5 minute candle. Now we've breached better word breached. Now we've breached the London session high. High. Now that we've reached the London session high, then the question is what? High, low, higher high, and we're just at a significant area. So I am watching for a market structure shift, and a market structure shift in this area would not be hilarious. It would not be funny to me at all. It would not be funny for us to have a market structure shift in this area. I think it would be very interesting and has happened in the past. Mm. 10:20 a.m. There are 5 minutes left in the 15-minute candle. No, they're not. Whoa. 9 minutes left in the 15. 9 minutes left in the 15-minute candle. I misread that. I'm not sure how. I'm not sure how. Maybe because I was looking at 1020 and I was thinking, right? 1020, 15, 5, instead of 10 minutes between 10 minutes left between 20 and 30. Where will we be at 10:30? Where will we be at 10:30? 10:30 is here. Okay. Hmm. Don't front run it. Do not front run it. I'm imagining the possibility of this being a run of the London session high for trade back in. But I'm not imagining that we're sitting on top of a 15-minute bullish fair value gap. So that's the deal, right? I'm not imagining that we're on top of a 15-minute bullish fair value gap. If we were the trade back into the optimal trade range of that gap is enough for me for today. I mean, uh, yeah, catching the long off of that gap would be nice to the upside. But regardless, we would still need to trade down in order to hit that gap on the 15-minute time frame. Hmm. Do we think that hitting that imbalance would cause an immediate reaction in either direction? Or would we sit in that gap and close out the day, right? Because it's such a higher time frame area. $21,400. 21,400. 21,400. 24. We turn over, drop right back in, trade into the wicks of these up close candles, drop back down, trade it to the body of this candle, drop down, trade it back up, trade it up, trade it up. Keep going. We need you to keep going. There's no gap here. In 25. 4 minutes and 52 seconds left in the 15-minute candle. This could be one of those days where we're going to trend. And normally, a trending day is one of my worst days because instead of seeing pullbacks to logical levels of support or liquidity, I don't see them. I ignore those and I say, "Oh wow, look, we pulled back, market structure shift," and it never is. And then I'll look back and at the end of the day, and it'll be 2,000 ticks. It'll be 700 handles. I'm like, what? Wait a minute, how did I not? eyes are a little irritated, irritated, irritated. I'm not even sure what that is. Boom, move to the upside. There we go. There we go. There we go. There we are. We're coming to the end of that 15-minute count. That was a slight impulse to the upside. Oh, oh, wow. Excuse me. 3 minutes left in the 5 minute. 3 minutes left in the 12. In the 12. Nobody's looking at the 12 minutes candle. Left in the 15-minute. I am looking at a very small level that I marked out at 20,000 at 20,000. What is this? Oh, 21,400. That's the close of last week. That's last week's close. We're approaching that level. 21,400 is just above us here. That's the close of last week's price action. Prior, 2 weeks ago, 2 weeks, 2 weeks ago, 2 weeks ago, 2 weeks ago, not last week, 2 weeks ago. Wait, that's the word, buddy. Don't lose focus. That's not what I wanted to see. Small imbalance. Drop down into that balance. Move higher. Yeah. So it looks like we may very well just be trending in one direction. I was hoping that possibly by 10:30 we would be in an area that would get us back on. Well, not going back. Whoa, 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 whoa. That we would be seeing some type of a reversal at the extremities of our trading ranges, of our sessions ranges. Am I back? Doo-doo-doo-doo-doo-doo-doo. Miami is 10:30. I'm not on the screen. That is the least of my concerns. Something, always something. Why? Why would you do me like this? Fine, 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 fine. That's fine. It's terrible. That's terrible. That's terrible. But it looks like I'm not gonna have a video today. No, 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 no. That's fine. It's all good. How long have we been streaming? An hour or so? That's actually pretty good. Well, the area that I was looking for is this 400 area, which is the close of last week. That's last week's close. Now, if we came into that area and then we targeted that level, tapped it, and then reversed at this point, I would not be surprised. And I'm not saying that we would price will collapse. I would assume that we would turn and have a retracement back into some sort of a higher time frame imbalance. Some one of the time frames that we left open, maybe as low as 21,316. I would think that would be a great spot for us to drop back into and move higher. Mhm. So let's watching these multi touches on the 5 minute chart. All right, we tapped that area once, we tapped that area twice. There's 44 seconds left in this 5 minute candle, and you seem just to be so reluctant to leave this area. Don't, I'm not going to take that as a signal. I'm just saying that that was just very odd. It just could be high resistance liquidity, like speed bump, right? So we could be moving to the upside. However, we're mm, 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 mm. All right, new 5 minute candle. Seemed like it did anything. See this? Hmm. Hold on. Now we're back at the London Session High. Found that to be quite, quite interesting. Oh, second trade of the day, and excuse me. I I w- I sat and I watched, and then price just dropped right down below London Session High again. And I was really wanting to target the retest of the London session, and I think that I kind of got a little ahead of myself again. So yeah, it isn't strategy as much as it is the impatience to wait for all of the all of the signals to play out properly. Uh, and I don't know why it is. Modify order, thank you. Please go away. Because we came back in and retested the London session high, I should have waited for us to um not trade down to the London session high, but I should have waited for us to trade the session high, right? If we were going to go down below London and then trade back up to it in order to displace from it lower, I should have waited for us to be lower. This is just barely just a tap inside of this imbalance of London session high that pushed us higher. Yep, that's the deal. That is the deal. So my entry was here. No, no, actually my entry was around here. Yeah, around that area right there. Hmm. Trend in one direction, no retracement. You know I hate that. I can't. Yeah, I know. I really don't like that. And so what I really need to do now is I really need to work on my camera to see what can I do to get it back online. Didn't really don't really like that. All right. I just sort of sat here quietly for a while, and I think that that helps, right? Does that help? Does that help? Just sitting quietly for a while, just watching, not thinking about anything else, just sitting and watching price sort of do its thing. I like this area that we're in. I'm thinking short like 15 times. And again, I could be entirely wrong about this. I could be entirely wrong about this, and that's fine. And you know me and the way I trade. I don't really care about that. This is my third trade of the day, and I'm gonna move my stop loss there, and I am going to sell the limit here. All right, trigger me in. Normally, when I enter a trade, what I love about my trades is if I'm wrong, it doesn't really give me a lot of time to think, oh, was I wrong? That's one thing I love about my trades is if I'm wrong, it goes directly to my stop loss. It doesn't give me a chance to mitigate. It doesn't give me a chance to reduce risk. It just goes straight there. It's like, oh, he's in, right? Normally that's that's what it does. This sort of stuff too, where my first entry was here, it comes down below that initial point of that previous entry, closes, retraces back to it. And let's go ahead and take a step back and look at the higher time frame, which is the 1 minute chart, as far as what it is that I should or could be looking at. 5 minute chart just closed. 5 minute candle just closed. And we have this small imbalance right here. It's a small imbalance on what time frame? 15 seconds. But we trade back up to the consequent encroachment of that level. And then we move down just a little bit. We only have these wicks as any area to think of as resistance. So we could drop down, just touch these wicks and bounce right up. So that's all that we would ever really get as far as warning or, you know, or any